If you're looking for a strategy that is stupidly simple and is fully mechanical and proven to be working over years of funded trading, this is it. I have been funded over 400 days straight across multiple prop firms, and I've made over 500k in payouts using this simple 3-step system. This isn't a cherry-picked trade or a trade from a 2-year-old backtest. This is a live trade from this week, and I'm going to break every single step down so that you fully understand how it works. And at the end of this video, I'll be pulling up my funding pips dashboard where I'll be showing you my $2,500 payout that I will be withdrawing in 10 days, generated using this exact same 3-step system. Okay guys, so now that we are on the charts, I want to show you exactly what I mean by the 3-step system. The 3-step system is very simple. It includes 3 simple things: a breakout, a one-to-one risk to reward, and a fair value gap as a confirmation for your entry. It's a combination of ICT concepts and my own mechanical system, and when you combine them together you get some crazy win rate strategies, and I want you to go and backtest this yourself as well. So as you can see in the chart right now, we already have the fair value gap indicator set to show us every single fair value gap on the chart. The system is very simple, guys. You go to New York time, so let's say this day right here. This is a 15-minute time frame. You take the candle after New York open, which is this one right here, and you will do a high and a low breakout of that candle. So this is our range right here. So now what we are doing is, once this candle is created, we are taking a breakout of this candle to the downside or to the upside, but we use fair value gaps as a confirmation. So as you can see in this exact scenario, what happens is we made our range, we close right above it right here. So what people would do in this case is take a buy order right here and a one-to-one risk to reward with a stop loss below the range and call it a trade, but that would hit stop loss, and that's why we would not be taking that trade and be using the fair value gap as our indicator for entries. So in this case, what happens is we don't take that trade, because the rule for the fair value gap is we must go through fair value gaps as we break out through our range. I'm looking for a destruction of a fair value gap with the same candle that destroys the breakout range and gets outside entry. So in this case, as you can see, this candle right here is going through a lot of fair value gaps. So, and at the same time, it's triggering in a short trade on that breakout. So what I do in this case, so our range right here, we enter, stop loss goes right above the opposite side of the range, one-to-one risk to reward. This would have been like a less than a 15-minute long trade, and we would have hit TP. We're going to show you a couple more examples so that we can clear out every possibility before you guys go yourself and test this at home. Okay, let's see this day right here. None of these trades are cherry picked, guys. I'm going through it as you are live with me on this video right now. New York open is here, 2:30. Next candle is this massive candle right here. We do a high and low breakouts. Okay, so what happens here? Again, as you can see, this right here, this candle is the first closure above the range, but again, we are not breaking through any previous fair value gaps. But as you can see, as we start dropping, we start breaking through fair value gaps. Right here, this is the main entry zone right here. We see we've broken through a fair value gap right here, and we've broken our range right here as well, and that's why that's a short I'll be taking right here. Stop loss again goes just above the range right there, and we will target a one-to-one risk to reward, something like this. And as you can see, this took a whole day to get triggered into TP, but it did hit TP. Win rate of this strategy is extremely high, and I want you guys to go and test it and refine it. Add optimizations around the strategy. Try to add more rules. Maybe you do a multi-time frame confirmation, or you even use an ATR for your stop loss optimization, but do not deviate from a one-to-one risk to reward, as that is a key component of this 3-step system. I'm gonna show you one last trade before I show you my funding pips dashboard, and I'll call it a day for this video, guys. Trying to provide as much value as I can for free on these videos, because this is how I trade. This is my methodology. So I want to share it with you guys on how you can have the same kind of vision, put it on the charts, apply it, and test these different systems and hopefully get profitable. So this one right here is New York open. The candle after New York open, as you can see, is this one right here. This is our range. Clearly what happens in this case, guys, we break out to the upside, but we don't break any fair value gap. So I would wait for price to break through this fair value gap right here, maybe create some more and then break through that, which doesn't end up happening even next day. So next day, that's the trade we just went through. So in this case, what happens is we negate that trade. If we get no trade by midnight, which is this red line right here, we don't enter any trades for that day. So there's no setup. That's a no trade day. I can try going through one last one if there is a trade on the one before this. Okay, so here 2:30, the next candle is this one right here. Okay, so as you can see, short breakout, something most people would have taken, but once again, there is no much fair value gap here that's being broken. We need solid amount of fair value gaps being broken, which you can see is up here. So now when price starts going up, we're breaking through this fair value gap, we're breaking this fair value gap, we're breaking this one, we're tapping into all of these fair value gaps. It's not a double tap, we're creating a fair value gap and going into it. It's more of a creation of the fair value gap, and then while it's being created, we're still going into the fair value gap and not having a solid massive fair value gap. Like as you can see, these ones, when price was here, this fair value gap was pretty big, but we burned out most of the fair value gap by price moving into it and then boom, back up. Same with these ones, we were burning straight into it and boom, back up. So this one, if I have to classify them as an A plus, as an A, B, C setup, this would be somewhere around a B setup. A and an A plus is the previous ones I showed you. This one we can still take it as a one-to-one risk to reward, but bear in mind, it could end up hitting stop loss because it's a B setup. So as you can see, one-to-one risk to reward approximately right there. This one hits TP around here. So as you can see, the win rate is already high. Like these are not cherry pick trades. I'm just going to random days on the chart and showing you my full process on how to identify these trades. And it's very mechanical. Okay, so guys, I'm gonna show you this on my phone. So as you can see right here, this is my funding pips rewards area. And currently I'm at $52,000 in rewards. And if I go to request a reward right there, you can see a reward eligible in 10 days on my 50K two-step master account. And as you can see, it's a $2,408 profit split reward. And it's on a 50K account, as you can see. So yep, that's my funding pips, guys. So thanks a lot, guys, for watching this video to the end. I really appreciate your support. Leave a comment below and let me know what you want to watch in the next video. See you guys in the next video. Bye bye.